Renovating Retirement with Charlie Jewett. Oh no, I think I'm about to have another episode.
Hey everybody, welcome to episode 146 of Renovating Retirement. I have a really special guest, one of my favorite people, Dominique Molina. Dominique, say hi.
Hello, everyone.
So I've known you a long time. This is, I can't believe it took me 146 episodes to get you on, but you and I have known each other for quite a long time and done some work in Hawaii and San Diego together, which now you're all over the country, right?
Yeah, and we've had lots and lots of fun and really enjoyed the collaboration. It's always great to be able to collaborate together, especially with someone really sharp. And so I miss that.
Oh my goodness! Like you just called me sharp. I could say I knew you when I knew you before you were the creator of the Certified Tax Coach. just saving saving a smaller amount of people money. Let's talk a bit about that and who you are and what you do in the world, so people know kind of who I'm talking to. But when I knew you, right, when I was first met you, we're both from San Diego. You were doing tax planning, which is different than tax returns.
Yes.
Kind of working before December 31st, working with people to set up tax savings. And I can remember, gosh, I think bringing 11 sets of tax returns to your office and putting them in front of you, and you just spent 2 or 3 minutes on each one, so that I can save that person $17,000 a year, this one $33,000 a year, this one at least $20,000 a year. Just like skills off the charts that I've never seen before. But talk a little bit about tax planning before we get into Certified Tax Coach and kind of where you went. But talk a little bit about what you were doing when I met you, so people know that it exists in the world and that it's available.
Right. Well, I'm a CPA by trade, Charlie, and that means for most people, you've got to get a degree plus a little bit of extra education there. Now they want a 5th year of education to get the CPA license, and it's great. You know, I'm a numbers person. I like problem solving. It just has been a really perfect career for me. But I started to figure out right away. I mean, I think back to my very first job at a fast food restaurant, and when I saw how little my paycheck was,
Yep.
I started to realize right away that, people don't pay tax the same way. And Ross Perot was really popular back in the day for paying no tax. And, when he was running for president, he kind of bragged about some of that. And I really wanted to get to the heart of how does this system work? Is it just that, some people are good looking, some aren't, and so those folks that are good looking don't pay tax? Or is it that they're rich or famous, or what is it? How does this work? And so that's really what I set out to figure out in my CPA career. And I'll tell you, it's just not taught in an undergraduate level program.
Mm-hmm.
And so I really started to uncover a lot of this stuff in law school and in reading a lot of different court cases and decisions that are handed down from the judges. And what I figured out is that it really doesn't matter how much you make. I mean, you can make $80,000 a year, you can make $80 billion a year. What makes the difference in how much tax you pay is whether or not you plan, and to what extent do you have a tax strategy enacted.
Mm-hmm.
And that got me really excited about that, because I kind of love Robin Hood stories, and I love this idea of bringing this information that typically is used by the really elite. And part of the reason it is because they've got, entire floors full of ex-U.S. Treasury officials that help them year-round not pay any tax.
Yeah.
And be able to bring that information to everyday mom and pop businesses, the everyday businesses that really make up the majority of businesses in this country. And so that's really what I've set out to do from the very beginning. And you and I have had quite a lot of fun, making this tax strategy piece being a very integral part of the overall financial strategy, because when you're saving 6 figures a year in tax, it allows you to grow wealth so much more quickly.
Yep.
And that's been a lot of fun for me. And so back in those days, when I was meeting with clients one-on-one and working together with you and your team, being able to collaborate. It's amazing to be able to give this gift to people and, see their growth in terms of their wealth or their dreams, really, and invest back in the business or share it with family or what have you. It's really exciting.
And I don't think people know, because I don't talk about it very much, but you were a part of a team where I think we had one or two realtors, two or three mortgage professionals, three or four insurance licensed professionals, right? And then you would sit with
Right.
my team of 9 and talk through cases and say,
Mhm.
like, how do we work on a collaborative basis? And there's not a lot of that going on in the financial services world. I don't know if I've told you this story, but when I first was trained by Douglas Andrews, who wrote the book Misfortune 101, his strategies were kind of a combination of tax planning, investment planning, and mortgage planning, right? And I'd never
Mhm.
seen that. And most people that grow up in the industry grow up, as a stockbroker or whatever, right? So I was
Mhm.
already fairly comprehensive, having had a real estate license and doing mortgages, and then all of a sudden crossing over to insurance. And there was a flavor there from Doug Andrews of saying, like, listen, this used to be only for the wealthy, and I'm trying to bring it to the masses. And that's what the book Misfortune 101 did. And then you show up and you've got this strategy that, the wealthy do, and you're kind of bringing it to the regular folks, right? And then
Mhm.
things like premium finance, which we do a lot of now, where a bank lends you money to put money inside of your retirement accounts, used to be only for the wealthy, and now that's for the regular folks. There's a theme here, which is
Yes.
what the ultra wealthy used to do to stay ultra wealthy or to optimize
Mhm.
everything that they're doing now can be done on a pretty normal level. Like, certainly if you're making $100,000 or more, $100,000 a year or more between you and your spouse, things like premium finance and, tax-free growth come into play if you own a business. And we should probably talk about that. You and I think probably the three groups, like if you're working a W-2 job, right? You're just an employee.
Mhm. Mhm.
You have there's two sets of tax code, right? The employee
Mhm.
and then everyone else, right? So if
Yeah.
you're a W-2 employee, outside of some super creative stuff that I've heard you talk about, where you become an independent contractor and do the same job and run your own business, there's not that much to be done in your world. But real estate investors, anyone that owns a business, anyone who's 1099, accidental entrepreneurs like people that rent homes through Airbnb or drive for Uber or something like that, all of those
Mhm.
groups can benefit tremendously from tax planning. Is that right?
Yeah, absolutely. And it kind of just comes down to those who are in control of their income and when they receive income are ideal candidates for tax planning. You mentioned, folks that earn a paycheck. And if you think about who's in charge of that, it's really the employer, because the employer could downsize anytime. The employer decides if you're going to get a raise or a bonus or when that happens, or even sometimes pay cuts. And so there are a few things, there's some charitable planning you can do, and we can look at some strategies or tactics to help minimize some capital gains, but you're kind of limited on what you're able to do. Instead, what we see is that all these loopholes exist for the businesses you just kind of listed off.
Right.
And if you think about it, it all just comes down to the why of the tax code. The reason that these incentives exist is because the government wants to promote its public policy. So we see that oftentimes, the White House has some sort of policy that it wants to promote, and it will oftentimes create a tax incentive to go along with that. So if you think about last administration, healthcare was a centerpiece of policy that was there, and we saw it enacted via the tax code. There were incentives for businesses to provide it. There were penalties if it wasn't provided, and that was all mechanized through the tax code.
Yeah.
And so we see a lot of these breaks for businesses because the government strongly believes that businesses help the economy flourish, and they want a very healthy economy. They want new jobs. They want expansion of business. They want money circulating.
Yep.
And so that's why.
Now, this won't be the main topic of our conversation, but just because I know your intelligence level and this is a retirement planning show, I'm guessing there's a category of people that are employees trying to figure out when they can retire, right? Who
Yeah.
could retire almost instantly if they understood maybe how to do the same thing they're currently doing on a part-time basis as a consultant. Or I did a whole show. I was going to call it Uber retirement. I don't remember what I called the episode, but the idea that like, if you can make $500 a week just driving for Uber, like just retire and just drive for Uber, right? If you can make $500 a week, that's like having an extra $520,000 sitting in your retirement account, kicking off 5% income for life, right? So there's probably a category of person who has been an employee, gets paid like an employee, who could retire almost instantly if they knew how to set it up the right way or do something part-time with tax sort of efficiencies. Is that right?
Yeah, absolutely. And you mentioned this concept of the accidental entrepreneur, and Uber definitely kind of fits into that. But Airbnb is another great example. You know, people are taking parts of their home, or they're adding on to their property, adding a granny flat, for example, or renting out rooms. And it can really be powerful in terms of supplementing that retirement income. And it's, as you quantified it, it's like having a certain amount of assets available to you to supplement. And oftentimes that speeds up your retirement.
Yeah, I have a client in Hawaii where you and I have gone together. We did some seminars in Hawaii together. I have a client there who's adding a unit to his land that's costing him about $5,000 a month because he's making about $10,000 a month from these units.
Wow.
And
amazing.
Hawaii's Airbnb numbers are ridiculous. They're 90% occupancy, meaning they're 90% of the time they're full. But today is becoming a reality that if you didn't save enough money, you could actually just go buy a 4 or 5 bedroom place somewhere that people want to go, Myrtle Beach or anywhere near the ocean, and live in a beautiful beach house yourself, but rent out the 3 or 4 rooms and do some driving for Uber or all these different sort of social, sharing economy type businesses. I mean, I've seen the craziest things. You can get paid to like cook dinners and have people come to your house like a restaurant and eat at your house. And paid to be people's friends, stuff like that. So that's the kind of out there on the borders kind of stuff. Now, you, as I was, the first couple of years I knew you, you were kind of forming this idea of the certified tax coach, which now is like way up and running. But tell us a little bit about CTC and how it was started and what it is.
Yeah. So, one of the things I realized early on is that my business really started to grow very quickly, and I can only help so many people. And so what started happening was that people were waiting crazy amounts of time just to get my next appointment. And I was shocked that people would wait that long, because you have to remember that when you're spending money on taxes that you shouldn't be spending, that could be a different way, every day that goes by is more money that you're leaving on the table, right? And I couldn't figure out why in the world people would want to wait that long. And I thought, well, I'm a nice person and all, but come on, does somebody really want to wait 2 years to get in? And at the same time, I do a lot of networking in the CPA space, and I had tons of CPAs from all over the country constantly calling me for advice and saying, when you were telling me that story, how did you know that you could do this, this, and this and reduce tax? And I really started seeing this huge need, because there's a disconnect between the education that is a minimum requirement to be in the space as a tax advisor versus what's possible on the tax reduction side. And you got to remember, the IRS does not penalize you for overpaying your taxes. They penalize you when you underpay. But there are no penalties for a tax advisor that doesn't know these things. And so I really started thinking, gosh, there is a real need in the marketplace for this. And again, ordinary business owners need to have access to this information. Should not only be reserved for the elite. And so that's where the idea for this nonprofit institute was born. And we've been going 10 years now, and we've got close to 800 licensed tax planners that are all around the country in every state. And they're all at different stages of development. Our apprenticeship program is called Certified Tax Coach, and those folks are kind of in training to get their license as a certified tax planner, and they can get that in about a year after the required education. But it's been really, really great because together, we've helped around 90,000 small businesses around the country, and that just makes my head spin thinking of how I could ever do that on my own. I couldn't.
Yeah.
And so it's been great to have the support and really this team of proactive planners that want to help just ordinary everyday businesses.
And those businesses could be something as simple as somebody that has 2 rental properties, right? It doesn't have to be like you own
Absolutely.
a Subway or a McDonald's or something. It's just that
Absolutely.
you're in the world of earning income outside of a W-2 job, and you get paid and have to pay taxes on it. I'll tell the story as we transition into I'll have you explain the difference between tax planning versus like I've got someone who does my taxes, that kind of thing. But let me tell the story. When Douglas Andrews trained me and I saw, oh my goodness, there's a blending here of mortgage planning and the way you own your home and your retirement, right? I came back to San Diego from Utah and started calling CPAs because I knew I wanted a team. And after like 30 or 40 calls, like my new definition for CPA was like certified that your personality is absent. Like it just was horrible. It was just so bad. Like I was like, listen, I need somebody who thinks outside of the box and understands like maybe you shouldn't pay off your mortgage because you keep the tax deductions and keep the money somewhere else earning arbitrage. And they just were very stiff and very unfriendly and like seemed to not want to be outside the box, just want to stay in the box, like putting numbers in boxes, So I said, this is stupid. I'm not going to call people anymore. And I said, I know Douglas Andrews went on his Mormon mission with a guy named John Preston, who's here in San Diego. John Preston's an estate planner who's done over 50,000 trusts. That's a lot of business.
Yeah.
That's a lot, right?
Yeah.
So I'm like, well, John Preston went on this Mormon mission with Douglas Andrews. They know each other. He obviously knows Doug's strategies. I call him up and I say, John, can you refer me to a CPA that would understand what Doug's doing and just would be comprehensive and not sort of stuck in the box? And he said, no, I haven't been able to find one. And I gave up. I'm like, well, my gosh, this guy's got gray hair. He's got 50,000 clients. He knows Doug and still can't refer me to somebody. I totally gave up, right, until I found you. Talk a bit about the normal personality of an accountant, okay? And then the career of, in April, you look back in time when it's too late and you put numbers in boxes versus what you and your team of 800 certified advisors, are doing, because it's different.
Yeah, it is different. And it really comes down to perspective. And I know we're kind of poking fun a little bit about the personality style. Let me tell you, Charlie, and people might be shocked to hear this interview, but I'm a real introvert myself. Again, I'd love nothing more than to just be holed up with my numbers and, figuring some things out, solving problems. I love it. And so the personality isn't the problem so much, but it's really the perspective. Okay. And you hit it. It's that when you are filing those tax returns, when someone's preparing the tax returns for you, think about the perspective that they're taking. They're looking in the rearview mirror. They are looking at what happened nearly a year ago, and sometimes even longer, depending on if you're, behind or whatnot. But they're looking at something that happened in the past, and they are recording that history. They're historians. And we can't rewrite history. So there's really only so much you can do. And so as a result, when you are focused on compliance and on that recording history, you tend to really get good and detailed about the rules. Yes, you can do this. Nope, you can't do that. And you focus on, okay, what can you legally do that's not going to get you in trouble with the IRS and properly put the right numbers in the right boxes.
Yep.
And instead, when you look at perspective from a strategic planning approach, well, if you're going to be strategic, you're really looking forward into the future, right? And it's sort of like a chess game. You are looking at all of the tax laws that are available to someone based on their circumstances. and you move the pieces around to see what is the optimal combination of laws that's going to result in the least amount of tax. And so that perspective is really one of the most important things that you're looking for, whether it's to apply the misfortune strategy or to, have additional funds throughout retirement or have more funds to grow your business. It's that forward-looking perspective, which is really a different type of work.
Yeah.
And so no, it's not included in the preparation because the perspective is all off. And so I'll tell you what, I cannot look at a tax return from a compliance point of view and do appropriate planning in the same day.
Mm-hmm.
Because I need time for my brain to readjust so that I can see with different eyes what opportunities are there.
So in the nutrition world, where I took a lot of training in my 20s, I could record what I eat and how I feel and all that kind of stuff for 2 weeks, let's say, right? And I just say, here's what happened over the last 2 weeks. And that's not any planning. It's just sort of data, right? And then I can turn around and say, how do I become healthy, or how do I get where I want to go, and create a plan going forward, which is now nutritional planning. Really, almost 100% of tax professionals are going to be the just writing down the data of what's already happened versus tax planning. Would you agree?
Yes, absolutely. And again, it's nothing to be good or bad. Just like we have specialties in other professions, medicine comes to mind a lot. There's specialists in different areas of medicine, right? If I have cancer, I'm going to want to see an oncologist rather than continuing with my primary care physician. Right? And the same is true with tax and accounting and your financial planning. You want to really be with that expert that is what they focus on. That's what they train in, and that's what they're really good at.
Nice. Well, you and I have a partnership to introduce. It's kind of exciting, right?
Yeah.
So we have been talking. We're going to partner together because the combination of saving people $10,000, $50,000, $100,000, $500,000 a year on their taxes, money they're already paying to the IRS. So they're already writing the check. The idea of saving them that money and having them redirect it to pay themselves, to put it into their own bucket to retirement, is incredibly exciting, right? And so we're going to be starting a new podcast called Winning the Money Game with Dominique Molina and Charlie Jewett. So we'll roll that podcast out here soon. But I know from my world, there's people like Don Blanton from Circle of Wealth, and also Len Rainier from Wealth and Wisdom Institute, who teach something called wealth transfers, where they say, and they're talking mostly about regular workers, not business owners and entrepreneurs like you're talking about, but regular people in the United States probably have $500 to $800 a month, I think is the average, of just money that they're unnecessarily and unknowingly overpaying or paying towards, fees and taxes and things like that. So $500 to $800 a month is kind of the norm for the regular folks. So that would be what, like 6,000 to, 6 to 12,000 a year, whatever.
Right.
What are you seeing? I mean, I knew you had this number when I was first met you, 10, 12 years ago, but now across 800 certified tax coaches, for the people who are listening, who have rental properties, or they're accidental entrepreneurs, or they own a business and know it, right? What are the kind of averages you're seeing that a tax planner, someone from your group, when they look at them, that you can save them per year?
A lot of it is really tied into how much you make. And that's just because, I can't save someone $100,000 on their taxes if they're not already paying $100,000, right? And so someone who makes $100,000 isn't going to pay $100,000 in tax. Knock on wood, at least not yet. Not with this administration anyway. So we see on average, if you've got an average income of $150,000 or less, we see people overpaying by about $15,000 a year. And that's just on the tax side. So if you've got, if you're retired, but you have some rental property income, or you do an Airbnb, or you are driving for Uber, something like that, chances are you're probably wasting about $15,000 per year. And what happens is, as you move up the income scale, those numbers get bigger and bigger and bigger.
Mm-hmm.
So someone who makes, say, $3 million a year, they may be overpaying by $800,000-900,000 per year. It really just depends on how they're earning that income and what their plans are really for their money. There's a lot of different styles of strategies that are available. Some of them are just little shifts in how they hold their business using trusts and things of that sort. Some of them are just looking at, hey, what's missing here? What are those write-offs that are most common that I don't see? And let's get them in there.
Yeah.
And so it really just depends on the income level. I would say, for people that are in the $500,000 range of taxable income, you're probably looking at about $30,000 to $60,000 a year in tax wasted that can be resolved with a tax plan. And so it's really fulfilling to be able to get that money back into the bank where it belongs,
Yeah, and it's so important to me as an investment advisor and a retirement planning specialist. It's like we're always trying to figure out, how do we get people to safely make 7 or 8% a year? How do we compound this money at some percentage, right? And a lot of the world that I at least take people out of, a lot of the financial world is you work with a money manager who charges 1% to try to grow your money or something like that. They're charging every year, right? And something unique about what you do, like let's say you look at somebody's, and by the way, we have a lot of real estate investors who listen to the show and will call up or email us, and once we talk to them, they're like, yeah, I've got $20,000, $30,000, $40,000 a month of rents coming in above my salary, and I don't know what to do with it, right? And we're helping them to invest the money, and the tax planning is another layer of that, right? Of what they could be doing. But you have a unique way that you charge, because if you're going to save somebody, let's just go the very low end, like you said, $15,000 a year, right? You're going to save somebody $15,000 a year. Are you charging them every year to get that $15,000, or just how do you charge?
So generally speaking, a planner is going to have a larger upfront fee for the initial design of that plan. And the plans we do are long-term. So we're looking at, what's happening this year and then what's happening about 3 to 5 years out. But once that initial plan is designed, then we kind of move into this maintenance mode, where really what we're looking to do is ensure that you continue to try to save that, or that you realize that savings every year after that. A lot of these tactics are annual. And so when we say 15,000 per year, it's every single year.
Right, exactly.
Which is a really cool prospect. And so you'll tend to see lower fees as you're going on in maintaining that. And then, if you've got a lot of complexity in your business, or things are changing all the time, maybe you're selling the company or you're selling a property, something like that, there may need to be, another bigger sort of plan to help you navigate around capital gains as best as possible. But typically someone's going to pay a larger architectural design fee, if you will, sort of like architecture, and for that plan, and then you move on to maintenance mode, which is less.
Right, and the rate of return is ridiculous. And that's part of what I've always been preaching is, merit planning, mortgage plan, estate plan, retirement plan, insurance plan, and tax plan. The tax planning has the best bang for the buck, or the best rate of return. Even if somebody paid $3,000 a year every year for $15,000 of tax savings, we're still at a 20% rate of return, And a lot of our listeners, really, go look at the tax you paid and see if you like the number or don't like the number. But the higher that number, the more you can probably save them, right?
Right. Exactly. And it's just a function of the tax code, because the rates go up as your income goes up. And so nothing really besides that makes the numbers higher, but that's how it's built.
Well, let me pick your brain a little bit on some stories or case studies without using anybody's name, right? And
of course.
Maybe we'll just pick the 3 kind of categories of person: a real estate investor, a business owner, kind of traditional, and then an accidental entrepreneur. But can you think of a real estate investor, somebody that owns properties or whatever, that you've been able to help recently, and give us an idea, kind of a before and after?
Yeah, yeah. Actually, there's a really cool story, and I think you actually know this client. In fact,
Oh,
it was
nice.
something we worked on together. But this person had a number of properties, and still does. Is involved heavily in the real estate industry, and is a rather young person in terms of age. Mid 40s. And there were some really, really cool loopholes recently available for real estate. And some of the issues with loopholes is that we tend to see that they're temporary in nature. For example, they may be passed into law to affect or impact an area that's troubled, maybe because of a natural disaster or because they're really just trying to economically turn things around. So we see some of those incentives like in the Detroit area. And through these incentives, what we were able to do is go back and recoup 5 years worth of taxes paid from the past
Mm.
for this taxpayer. And what that resulted in, Charlie, was it resulted in the ability for this investor to go out and purchase an additional 3 properties in cash with all that tax savings.
Mm-hmm.
So it was like getting homes for free. And we did this over a number of years and combined, with the investment advice at the same time. What we were able to do is also convert her retirement funds to tax-free accounts. And so as a result of that, this person is now approaching retirement about in the next 2 years here and will be living completely 100% tax-free. So that's sort of the power in looking at what strategies are available, and some of them are regional. They may be a state incentive or a local incentive. Some of them are federal, of course, and then knowing when they're available and putting those into place so that you can use the benefits that are meant for you to use.
Exactly. Nice. So buying properties for free, anybody that's in the real estate world would value that, obviously. And you have an advantage. In my world, it's very common for people to learn what we do and say, "Oh my gosh, I wish I knew you 3 years ago. I wish I knew you 10 years ago. I wish I knew you like whatever." Right? I wish I'd
Right,
found you sooner. Right?
right.
You have a bit of an advantage. Talk a little bit about amending tax returns and what the law allows you to do for somebody.
Mm-hmm. Yeah, amending is certainly an option for correcting mistakes that we see. And
Mm-hmm.
a lot of times when, if I'm working with somebody for the first time, if I identify mistakes, that's a pretty easy fix to go in and then restate the returns that have already been filed. And there's a time limit and there's some considerations you want to have in mind, audit risk being one and, other sort of non-tax issues that come up. But in that process, there are opportunities to go back. And what happens is, like in the story I just shared, you get a check back or you get a deposit back straight to your bank account from the IRS or from the state or both.
Yeah.
In those cases, it's not always available because it really depends, again, on what your situation is. Remember, I talked about perspective. And so, again, you can't really change history. We can't take a strategy, for example, and say, gosh, I wish I would have applied this 3 years ago. Let me go and do it now.
Yeah. Yeah.
It doesn't always work. But in the case of things that were available that were just missed, oftentimes we can go back and amend. And that's pretty powerful to put money in someone's hands, within just a few months from filing those amendments.
Yeah, it's one thing to say like going forward, we're going to save you $20,000 a year
Hmm.
versus, oh, I just looked at your last 3 years tax returns and I'm going to get the IRS to write you a check for 40 grand or whatever. And that
Right.
covers,
And
it's amazing.
usually it's a combination of both. We're going to save you 20,000 a year going forward, and you're going to get a check for $40,000 back from the IRS.
Right.
And again, it's so powerful. In fact, I'm just kind of a numbers geek, Charlie. So I
Yeah.
actually crunched these numbers.
Oh,
But
nice.
using some information from Warren Buffett, what I calculated was that even a 10% reduction in someone's tax results in their ability to grow their wealth 21,000 times faster
Jeez.
than the person paying 10% more.
Whoa.
So even just going from 37, to 27 gives you the ability to grow your wealth much, much faster.
Yeah.
And that's really where the real power comes in. It's you've got that compounding ability because you have more money than other people do.
It's almost like a match. It's almost like a 401k match, right? It's like so good because somebody else puts money in for free. Well, if you're
Right.
already paying the money, you're already paying the IRS, and all we do is you find it and I invest it. It's like free money, basically.
Right.
Right?
Absolutely. Well,
That's
and I would say it's your money.
yeah.
Right? It's your money. And it was kind of funny because I met with an auditor recently, and he drove up in this really nice BMW. And then, the taxpayer is very humble, and the taxpayer drives up in a Toyota or something like that. And I thought, my gosh, that guy's driving your car.
Yeah, exactly.
So, I'm joking, of course, that really was the real situation, but it's not literally like the IRS people are driving your car. But the point is the same, that it's your money.
Yeah.
And there's not, it's all 100% legal. I never recommend anything that's not IRS tested and court approved.
Yep.
And that's simply because I don't need to. There's so many things that you can do that you don't have to push those boundaries and feel uncomfortable the rest of your life looking over your shoulder to see if today's the day they catch up with you. You
Yeah.
can do it legally and keep your own money.
And what I think people don't realize is the vastness of the tax code and how someone can't know taxes. They have to become a specialist. I spent 22 years in the Christian church during a season of my life, and I think someone said the tax code had 40 times more words than the Bible at that time, right? And I don't know a lot of people that memorize the Bible, and it's fairly static, but the tax code is changing all the times, and it's 40 times more words. So we really don't have, like, if you're going and having someone do your taxes every April, this is not a person that knows the tax code. I'm doing air quotes. If you want to save taxes, you've got to work with someone that's gone purposefully into that giant reservoir of codes, right? And said, what exists here to help business owners, real estate investors, and accidental entrepreneurs, and pulls just those pieces out, right? And that's what you've really done and trained 800 people to do, right?
Right. And it takes time. Hey, I don't have it memorized either. And I continue to learn new strategies every single week in my practice. And a lot of that is because, hey, tax laws are continually changing.
Right.
But a lot of it too is because we come across different circumstances. Everybody is different. And so that's the other piece of advice I have for listeners is that, you really shouldn't be getting a cookie cutter plan either. I've got a great book I'd be happy to send out if anybody's interested, but it does give you some kind of do-it-yourself ideas on what we talk about with planning. But at the end of the day, I've never in my entire career done 2 tax plans that were the same.
Yeah.
Out of over 1,000 plans. It's really based on your unique situation. What's your exit strategy? What's important to you? Where does your money go? And what do you want to see happen? And when we take that information and we apply it to what we know is possible, and with a little research sometimes for things that I'm not as familiar with or that may be a little newer, like tax reform, we're able to then put together a plan that's going to work within your lifestyle and give you back your own money.
So I'm going to act on my listeners' behalf here before we get to the example for business owners and accidental entrepreneurs. Did you mention it? Did you say you have a book to give away?
I do. Yes,
Come on. Share more.
I actually expect to be getting it hot off the presses in about a week's time here. It's called Write-Offs to the Rescue. This is our newest book that's come out, and I'd be happy to send some away. Send some out to some lucky, deserving listeners. So yes. I'll let you be the judge of that, Charlie, and who gets a book. But yeah, it's kind of like a do-it-yourself approach, and it definitely gives you a lot more ideas on what to look for, to ask yourself, am I doing this right now? And if not, how do I do this?
Well, that's awesome. If you have some copies of that book, let me give an email address for people to kind of write in and ask for that. Okay. If you guys would like a copy of that book that's hot off the presses, I haven't even read it, be info@l5wealth.com. That's info at the letter L, the number 5 wealth.com. Maybe just put in the subject line, Dominique's book or tax book or something like that, and just ask for a copy so we can start to kind of build a list of those of you that would like to see that. And then if you want to contact, have Dominique look at your situation or review your tax returns or somebody on her team. To do that, you can email the same email, info@l5wealth, or call us 888-285-2268. Now, real estate investors, they don't see themselves necessarily, Dominique, as being business owners, but in many ways they are, because they have the ability to get a lot of deductions they're missing, and they also have the liability. So ability and liability, right? If somebody steps on a rake and hits their face, they need to have some protections in place as well. I've seen you, fascinating, set up, tax plans with multiple entities, multiple different corporations. This one collects the rents, and this one does this, and this one protects you from, angry tenants or whatever. Just like the combination of saving tax and saving your own butt, basically, right?
Oh yeah, absolutely.
But we also have probably the greatest transition of business owners ever to be done is coming up as the baby boomers retire. There's the traditional business owner. They own a restaurant. They own a leasing company, whatever. They own, a landscaping company. Just if somebody knows they're a business owner, right? They're the traditional, not an accidental entrepreneur, but they own a business like you and I do, right? What have you seen in that world that you've been able to do? Do you have a story, kind of somebody recently you've worked with that didn't think they could save taxes, but you're able to find a ton of tax savings for them or something?
Oh, sure. I was recently, this is sort of top of mind because right after we finish this interview, I'm going to hop on the phone with this person and actually present what's going on. But working with a veterinarian, and the veterinarian really had a lot of opportunity, particularly in the area of tax reform, because there's a lot of new loopholes that exist for different types of businesses. And so this person has some S corporations. The only problem is that a lot of the loopholes that were passed for S corporation owners don't apply to certain types of businesses, and veterinarians is one of them. And so looking at the issue of entity selection and whether or not someone is in the appropriate entity really involves looking at, what sorts of tax benefits exist, whether it's a C corporation or an S corporation, LLC, partnership, you name it, and what types of spending does this person have? What types of write-offs can they really use? One of my favorite things to do is called expense shifting. And that is, most people spend after-tax dollars on things that they want. To save for my son's college education, for example, typically people are going to spend after-tax dollars for that. I earn my money, I pay my tax, and what's left over, now I can hopefully save for things I want to get, or to prepare. And instead, being able to earn your income, spend it in a tax smart way, and then pay tax on what's left over is extremely powerful. And so really entity choice plays into that. And so for this particular veterinarian, we were able to save a total of $520,000 per year in tax.
How much?
And that was $520K.
Jesus.
So $500,000. And wow. That was from really analyzing that entity, recommending an entity. There were actually 2 new entity recommendations, and also taking advantage of some tax credits that he wasn't benefiting from already.
Man.
And in fact, he's able to go back and amend, and we're kind of estimating there's about $90,000 or so he'll be able to recoup from filing those amended returns. So for someone like that, that's actively growing a business, he's getting ready to do some construction and expand, that's valuable money, because otherwise he'd have to borrow that. And to be able to get that back and make use of it. He's going to be adding jobs to his
Yeah.
business, and it's really fantastic.
And part of the reason we partner together is because let's say somebody saves $500,000 a year and they're going to work for 5 more years, right? What the listeners don't know, and you and I both know, is that there's premium financing companies. There's companies that'll lend you money to put money into retirement. That if you're going to do 500,000 for 5 years, so that's 2.5 million, right? They'll come along and give you 3 times that. Basically, they'll give you another $7.5 million to put into your account. So you're putting in 2.5 million, and you get 10 million in there growing for you. And yes, they charge you a little bit of fair interest on what they're what they're lending you, but you end up with 60, 70, 80% more retirement income, more growth by leveraging the same way we live in better homes because we have mortgages, right? Imagine if we didn't have mortgages, what kind of a home you could live in. Well, $500,000 a year, that's nothing to shake a stick at. That's awesome. That's huge.
No, it's amazing.
Jeez.
Yeah, it's great.
Now we have a third category, especially now, right? With the kind of the Airbnb and Uber and kind of the way the world's changed. There's a third category of accidental entrepreneurs or people that are listening that could become one of these entrepreneurs, right? That could switch over and retire. Because I have 2 episodes back to back. One that says Americans work way too long, and the other one says Americans don't work long enough. And on purpose, they sound like they're disagreeing with each other, right? Part of the reason I say Americans work way too long is you don't have to stop. You don't have to like quit your job and sit on the couch and watch soap operas for the rest of your life. You can do something. It's actually very healthy for you to continue to be in the world, right? And it could be start a business or buy a big house and rent out your rooms. Or I know a guy, I'm not kidding. He's actually a CPA too, a friend of mine. I know a guy who drives for Uber because he's social. Like his wife doesn't even like talking. Like very rare, I guess, for a wife. She calls it free ears. Like he literally drives for Uber as a social experiment because he likes talking to people. And
they actually pay him to do it, right?
Exactly. He's like the bartender, you know what I mean? He gets to like talk to them and hear their problems and all this kind of stuff. But the idea is not to retire and do nothing. There's a lot of people, in my opinion, having reviewed over 1,000 financial plans, there's a lot of people that could retire instantly if they did something like rent out a room or, drive for Uber or whatever it is. But that puts them in the business owner kind of category, doesn't it?
Yes, absolutely. I also like to think of contractors. Sometimes contractors who get paid through a 1099 don't often see themselves as an entrepreneur or business owner. But when you get paid via a 1099, again, it's about control, right? You've got control over when you work, how much you work, what you get paid. And again, that's really the key here, is that it opens the door so that we can do this type of tax planning. And so all of those things, Airbnb, Uber, owning a rental property, no matter how small you may think it is a vehicle for you to start to write off some of those things that either you haven't been able to write off before, or some things you just weren't aware of and you just missed.
And probably falling under that category too, kind of a growing group of people is those that make their money from some sort of network marketing group, right? If you have an organization you're paid on, right? Some like Legal Shield or Amway or something like that. If they're typically not holding taxes out and running it through payroll, right? They're just kind of paying 1099.
Right. And what I would say is the big differentiator you're looking for too is, and I'm bringing this up with the network marketing because there have been some interesting court cases about it. The biggest problem people can fall into is if they're not working enough in that business. See, here's the thing. The IRS knows how this works, and so they don't want you to just put a sign in your window or on your car and say, boom, now I own an Amway business.
It can't be a hobby,
want to see
right?
that you're correct. They want to see that you're actively pursuing a profit. And so that means taking on certain activities to like marketing, to try to make money. And so I'd say that's probably one of the pitfalls you want to avoid, but it's totally doable. If you're in a network marketing organization right now, find out what those requirements are, because simply mapping out what those requirements are and then crossing them off your list to go, check, I meet that one, check, I meet number 2, check, I meet number 3, that gives you access to these lower taxes.
And I have people in my life that I know listen to the show making $10,000, $20,000, $30,000 a month through, different network marketing organizations because they build a big team. But that's a business, right?
Right. Absolutely. And it doesn't mean you have to make money, but pursuit of money is a different thing, right? So don't let that discourage you if you're just struggling to get your business off the ground, or it's something that you're considering. There are ways to cross off those requirements and meet them. That's really what you're after here, is legal tax savings. And just by following the rules exactly the way they're designed, you can pay a lot less in tax.
And a really easy group. I have a number of financial advisors who listen to the show. That's a really easy group. They obviously own their own business, and you could probably help them.
Absolutely. Yeah. And financial advisors in particular, along with accountants, because I mentioned that tax reform loophole that's kind of against veterinarians. Well, they're against financial advisors and accountants too. So.
I noticed. I actually went to a presentation one time at Advisors Excel, who and they had a guy stand up and sort of walk through the changes, that Trump made, and literally every single one of them, like, well, that's bad for me. Oh, that's bad for me. Well, that's bad for me. What? They lowered the amount of mortgage you can deduct? That's bad for me. Oh, the financial advisors are exempt from the 11% flat tax or whatever. Oh, that's bad for me. It was all bad for me. Right? So it is what it is. But for people, and you'd probably agree, I have an episode called Taxes Are on Sale for the Next 7 Years, where I interviewed David McKnight. I would guess a large part of like what we want people to be doing is kind of converting to Roth over the next 7 years, or somehow taking advantage of these low taxes that we may probably never see again. Do you kind of agree that taxes are low right now and may need to go up?
Yeah, and I think most people do. If you look at the size of the deficit, and a lot of people aspire to earn more. Those two circumstances are usually don't spell low taxes, right?
Yep.
And so the key there is a multiple year plan. It's about looking at either how can we control our tax rate so that it is low when we're going to receive money. Let's say, for example, you want to sell a property that you have that's gone up in value. Well, the best time to do it would be a year that you have really low tax rates, right?
Yep.
And if you have the ability to control your income and the timing of that, your taxes are on sale.
Yep.
So I love that phrase you're using, on sale, because it's so true. And it does make a difference in how much you pay. It's tiered, right? The higher your income goes, the higher tax rate you pay, and the lower your income is, the less you pay. And don't forget, there is a tax bracket of capital gains that is 0%. My favorite tax rate.
Yeah, I like that. How much capital gains can you make and keep it in the 0%?
Well, the capital gains rate is tied to the ordinary income brackets. And so for a married filing joint couple that keeps their income below $19,400 for the year, they will pay 0 in capital gains generally. And I say generally because taxes are kind of like onions. You peel off a layer and you go, oh, darn, I have this and I can't do that. But in general, that's how it works.
But you could purposely keep your income low by like saying, okay, let's spend a year and live off of savings. And
absolutely. And especially when you talk about retirement planning. Tax planning is a huge part of it, because when you look at having different pools of assets, if you can live off of tax-free assets or tax-advantaged assets, so that you can purposely time this out. You can earn, as a married filing couple doing joint, you can earn up to $408,000 and only pay the 15% capital gains rate.
Right. That's awesome.
It's a really great opportunity for people, and really tax planning is the way to save yourself from the burdens of high taxes, and you just do it using write-offs, loopholes, tax credits, and deductions.
Nice. Well, let's do this. Let's wrap this up this way. If somebody feels like they're paying too much tax, or they'd like you guys to review their situation or whatever, right? They get in touch. They email me at info@L5wealth. So info at L5, letter L, number 5, wealth.com, or call 888-285-2268. They raise their hand and say, hey, can I take a look at tax planning, right? Talk us through that process of how you review and how you quote, or what they would experience. You know what I mean? What would you need to see, and what so that they're not scared like it's going to be a high pressure sales pitch, or do they have to pay you up front before they know anything good's going to happen, or what happens?
Yeah, that's kind of the exciting thing about what we do. You know, the worst thing is to generally work with a service provider when there's uncertainty about what the fees are going to be. I mean, I tremble when I'm on the phone with my attorney because I just don't know how much that bill's going to be for such a short call, you know? So what I recommend to folks is, hey, know what you're getting into. When you're going to do something like tax strategy, you should know exactly how much it's going to cost and exactly how much you're going to save before you enter into that engagement. And that's the great thing about what we do. So just by having a tax planner review your most recent set of tax returns, you know, and if you own a business, it'd be the business and the personal returns. We should be able to fairly quickly be able to give you an estimate on both what it's going to cost to develop a plan and what you can expect to save as a result of doing that planning. And that way, as a consumer, you have enough information to make an educated financial decision.
Yeah. So it's nothing's changed. It's the same. You're going to tell somebody, or your group or one of your advisors is going to tell them up front, like, just without looking any further, digging deeper, we're going to save you at least X amount per year, right? And we're going to charge you this much up front and this much each year to maintain it. And from what I've seen, there's a higher rate of return on that than anything I offer. Just an incredible rate of return. And people are pretty motivated not to hand money over to the IRS and to bring it back into their lives, and then we can invest it for them. So it's a perfect partnership. And that's why we're starting our new podcast. Hey, right? Winning the Money Game. So you guys look for the new podcast, Winning the Money Game, with Dominique Molina. As you can tell, she's an incredibly sharp and amazing person. She says she's an introvert, which I don't believe, but she's amazing. So we'll start the Winning the Money Game podcast coming up here pretty soon. Anything else you want to say to the listeners, or anything you want to say before we wrap up?
Well, just wanted to say thank you for allowing me to share this knowledge with your listeners, and I'm really happy to do it. I feel like that's sort of what I was born to do, and I hope whether you're able to just do a little more research so you can be more educated on this subject, or whether you connect with a professional that knows how to do this, that you get everything that's yours in your pocket because it's your money.
That's the easiest financial planning you can do, right? Is like, stop giving away money that's rightfully yours.
Absolutely.
You know, earning a rate of return, choosing the best products, all that's difficult. We don't know what's going to happen in the future, but if you're overpaying by $20,000 or $30,000 a year and you can have it immediately, or even go back 3 years and get some of it back, that's the easiest money to find, right?
100%.
Well, listeners, if you guys like what you've heard, or want a copy of Dominique's book that's coming out, want her team to review your situation, to give you a quote on the tax plan, or just have some questions for me, get in touch. info@L5wealth.com. That's info@L, the letter 5, the number, wealth.com, or 888-285-2268. This has been Tax Planning with Dominique Molina, and I guess we're going to sign off. Dominique, thanks so much for being on the show.
Thanks for having me, Charlie.
Let's do some good for people. We're going to help a lot of people, aren't we?
Absolutely.
Awesome. Well, I end every show the same way. I do this because I think you people are the best.
Renovating Retirement with Charlie Jewett.
That's all, folks.